Portfolio Builder members, today is Wednesday, July 19th. We have the Fed announcement today. A lot of anticipation. The most likely prediction that I've seen is that they will hint at a rate cut next month and follow the lead of all the other central banks who've been easing financial conditions. Now, if they were not to do that, if they were to remain tight, neutral, or start to raise rates, I think that would be highly unanticipated and probably create a currency forex problem, which could seriously create a lot of financial turbulence. So my expectation is that the bond market has the anticipation of rate cuts correct, and that we will see the hint today at rates going lower. If that's the case, SPY could very well jump to new highs, and that's why we've chosen to write the 295 SPY covered call. Now, I will say there is a huge amount of put option interest hitting the 287 strike, so that does make me a little nervous. And if the SPY is not reacting positively today, we will be able to take profits on this out of the money covered call and write a lower strike. So there is a chance that I will issue one of those rare emergency alerts at the end of the day. And all that would mean is we're going to get a double payday. We can take some profits off the about 50 cents we can collect right now on the 295 SPY. And once again, rather than buying a put option on the SPY, I feel that we have a better hedge against the real risk to the market by buying a put option on FXI. So the last time we did this, it was the same expiration date, but it was the 38 put. Today it's the 39 put. And so it costs a little bit more, same expiration. Our plan is to load up on put options in this program on FXI that have a lot more duration. I think getting the timing of market volatility will be a lot more difficult than predicting that there is problems ahead. So my expectation today is that the SPY will shoot higher, that we will get to realize quite a substantial profit today. It could be our most profitable trade of the year. We've been averaging around $2 a pop, and with this trade alert, we could potentially generate about $3 potential profit on the covered call because we're agreeing to sell our shares for $2.95, and the SPY is currently trading at, and we'll scroll down when we put the trade screenshot, is trading at $292.17. So potential profit on this trade is just under $3, but we have a small amount of potential to get a little extra. If we just go up $1 or $2, the call option may also lose its value, and so we could generate a profit from the SPY going up plus this out of the money covered call losing its value. Now our plan is to reinvest about half of the potential profit I'm expecting if the market just goes flat or slightly up into this August 16, 2019 $39 put option. Now again, this is targeting what is susceptible to Wall Street pulling cash out of from China. So much of China's economy is not open to the stock market, but there are a few entities that they have been allowing to access public markets to a degree, and this is really concentrated in the FXI ETF. Now there's a ton of money in lots of different emerging market related ETFs that flow to China, but this is where I've identified what I believe is a choke point that could potentially be used to cause some severe damage to China if they do not want to play fair in the trade deal, which I highly, highly doubt that they will. So rather than buying the put option on the SPY, our basic assumption is that what would cause a disruption to the stock market would be a breakdown in the trade talks. And if that's the case, number one, I think the timing will be off for most people buying put options. They're going to miss the timing. And then two, they're not going to realize that China is much more vulnerable to the market volatility and potential sanctions that the U.S. could either issue or threaten to issue. So if we think about what America recently did with Huawei, banning all its partners, think about what it's done with Iran and North Korea, it's pretty simple. They like to go find all the trading partners related to what's perceived as the enemy and really cut them off financially. And so this has been warfare with major developing economies when there's a threat of nuclear destruction. So my guess is that China does not budge on anything and remains just right where they are. And they believe they have a better setup. They think that their GDP growth is stronger. It was at 10%. It's crashing. It's down to 6%, and that's all, of course, according to their numbers. But they've managed to concentrate the power of the Communist Party, not just in the terms that now the people can't really speak out against their government more so than ever, but President Xi has been able to run this anti-corruption thing that put some 50,000 people in jail. These were all his competitors within the Communist Party. So he's really concentrated the power, number one. Two, they've been able to make it very difficult for the public to speak out against the Communist Party. Not only are they filtering the text conversations, just literally a filtering program that deletes any words that they don't like in all forms of digital communication. They're banning websites that speak out against it. They have this social credit system that has put everyone in a fearful state of being. They have concentration camps. So they are just making a lot of dirty moves that could be easily exposed by our media. And so that's the general idea why we're hedging with FXI and long the SPY, even though I think there's going to be some potential volatility for both indexes in the near future. Now, typically, we've had our biggest up days this year. In fact, a huge amount of the up moves in the market have been directly after Fed meetings. So we're taking a little risk today. We were able to capture most of the profits this year, but we've been a little bit too tight with that covered call, being a little too close to the price on Fed day. So it would be a huge shock if he was hawkish, and that would cause me to issue an emergency alert later today. And that would look like what we're doing right now. We would buy to close this current covered call and then write a new covered call, most likely with an in-the-money strike. And that would be in a reaction to a more hawkish Fed than what is expected. So again, if they don't lower rates, there's some big things that could go wrong. The bond market might freak out, start selling, push rates higher. That would be a nightmare. And then two, with all of the other central banks easing policy and lowering rates, this could create a major currency risk where the dollar gets too strong and continues to put pressure on these other currencies who are losing value against the dollar. So now all of a sudden, this makes our trade balances get even worse than they are right now. So with that said, most likely Fed comes out, says some nice things that are dovish sounding, or at least hinting, market jumps higher to celebrate, and that will be the outcome. Now, if it's not the outcome, we'll be ready to close this position out for a big profit today and write a very defensive covered call. So I hope that makes sense. I'll just review. We made about 84 cents a share from Monday through today, and that's not counting the 45 cents per share that we reinvested into the FXI put. So now we have two FXI puts open. However, I'm not recommending that you go back in time and take previous trade alerts. The goal here is to pull some easy profits out of the option market and to build up a sizable hedge for free with the credits we're receiving to protect us against the downside risk until the trade war is more clarified. And so a lot is up in the air. Next week they'll be meeting in Japan, and we'll see if there's some positive news that are sent out from that meeting, although I highly doubt that a real trade deal is in the books. And I think this is going to be a very big story that plays out not just over the next few months, not just over this election period, but really over the next several decades, as China and the U.S. are going to see which system works better. The democratic capitalist society, which has its definitely, I was doing the example to my kids, imagine we all want to vote on what ice cream to get. And if no one can agree, well, we may end up with no ice cream. China, they might still ask all the kids what kind of ice cream they want. If they disagree, the answer is vanilla, and they just move forward. So that's just a very simplified example of the pros and cons of China against America. So they've been a powerhouse. They're definitely growing very rapidly and certainly becoming a threat to America. And that's why I think that this tensions cannot be easily resolved. And that's why we're buying again the FXI put option instead of the SPY put option. So I hope this makes sense to everyone. I'll once again review the trade one more time. Step 1 is you have to have 100 shares of the SPY. Step 2, if you did take Monday's trade, is to buy to close the 290 call option. You're taking a loss on the call option because you've generated the profit from the SPY. Okay, so that's what happens when the SPY goes up. We make money from the SPY going up in value, and the covered call typically will lose value. On the other hand, if the SPY goes flat or down, we lose money on the SPY but generate profits from the covered call. The next step, which could be your second step, if you did not take the Monday trade, you do not need to buy to close the call option from last Monday. You would go directly to sell to open the June 21st, 2019 295 call for a credit of 48 cents. The next step is we're not closing out any of our put options. One will most likely expire worthless today unless there's some sort of surprise from the Fed announcement. And again, I'll issue an emergency alert saying which put options to exit will not be our FXI ones. We're going to be holding those much longer than today's date. And so that's the plan. Hope this all makes sense. If you do have questions, please don't feel shy. You can write our support, and we will get your questions answered very quickly. And don't forget, we are raising the price of our basic membership from $8.97 a year, which you can get as a special discount right now if you call Dean at 505-322-7515. And the price will go up to the normal retail rate of $19.97 a year. So that sale ends this Friday. Call in now, save, get locked in for only $8.97 a year. You get 3 trades a week, Monday, Wednesday, Friday, plus the live webinar, which is today, 1 Eastern for paid members. Tomorrow for free folks. So if you are on a free trial and you want to speak with me directly, tomorrow's your chance. You'll get an email about it. And that's a wrap. So look for a new update this evening. And again, we're on high alert to react to the Fed announcement. Very likely it's going to be positive, dovish, and bullish for the stock market. So if it's not, we will definitely issue an emergency alert today and make sure everybody can sleep safe at night and not have to worry about what's going on in the stock market. Thanks again.